Have you ever wondered what the best strategy is to trade reversals? The most common strategies are based on trend-following principles since they are easy to follow. Trading reversals is usually done by more experienced traders. However, knowing when a reversal will take place isn't hard if you use the right strategy and tools to help you make educated trades that cause for a high win rate. So in today's video, we will be showing you an effective and straightforward way to identify and profit from reversals. Now that we have gotten that out of the way, let's start. There are many types of reversals. One of the most common types is the mean reversal. A mean reversal is a theory that suggests that the price will return to the average of the price. We can see that this occurs at these points. When we try to identify a pattern, we'll see the following. Whenever the price separates from the average and the deviation is at its largest, a reversal is made back to the average of the price. To know what the mean or average of the price is, we'll add a moving average to the chart. Head over to the Indicator Search tab and search for the Moving Average Indicator. Select the Moving Average Indicator made by TradingView and add it to the chart. Now navigate to the Indicator Settings and click on the Inputs tab. We will be changing the length of the indicator to 50. After that, click on the Style Settings. We will change the color and thickness of the line to make it more visible. If we look at the chart again, we can spot a new pattern. Whenever the gap between the price and the 50-period simple moving average is the largest, the price makes a reversal, bouncing back to the moving average. Here we see this happening again. As soon as the distance between the price and the moving average is the largest it has been, the price makes a reversal back to the moving average. From this, we can conclude the following. No matter how big the gap is, the price will always return to the moving average. However, only using the moving average indicator, we can immediately identify a problem. There is no way of knowing the exact point at which the price will make the reversal. As you can see here, the gap between the moving average and the price was already at its biggest, but the price continued rising after this point before making the reversal. To fix this, we will need to add a different indicator to the chart. Head over to the Indicator Search tab and search for the Bollinger Bands indicator. Select the indicator made by TradingView and add it to the chart. The Bollinger Band indicator consists of the following: a moving average in the middle of the chart, an upper band, and a lower band. If we head over to the Bollinger Band settings, we can see the standard deviation setting. This is the setting that determines the value of the upper and lower bands. We will be keeping all of the input settings the same except for the length. We will be changing the length from 20 to the Fibonacci number of 89. After that, navigate to the Style Settings. We'll be changing the color and thickness of the lines to make them easier to see. That was all that we needed to do. Now let's take a look at how we will be using the indicator. But before that, if you are looking for a crypto exchange that currently has zero spot trading fees, some of the lowest fees when it comes to futures trading, and up to a $30,000 bonus, then check out Bybit. They currently also have a trading tournament where you can grab up to $200,000 in USDT bonuses. Sign up via the link in the description to get access to all of these perks. The Bollinger Bands are similar to the linear regression indicator we previously showcased. This is because the price usually falls between the bands. However, whenever the price breaks through the upper or lower band, a reversal can be expected. This means that the Bollinger Bands will help us determine whether the gap between the price and the moving average is big enough for us to enter into the position. Let's look at an example of this. As you can see here, the price has closed above the upper Bollinger Band. Because of this, we will enter into a short position. We will place the stop loss at the recent swing high, and for the take profit, we will target the line in the middle, which is the moving average. Now let's see how the trade plays out. Here we see that the price closed below the lower Bollinger Band. This indicates that the price might reverse back to the moving average. Based on this, we will enter into a buy position. We will place the stop loss at the recent swing low, and for the take profit, we will target the line in the middle, which is the moving average. Now let's see how the trade plays out. As you can see, both trades are very profitable. However, even when using the Bollinger Bands, there are still many false entries that are being given. To avoid these false signals, we will add the second and last indicator to the chart. Head over to the Indicator Search tab and search for the RSI indicator. Select the indicator made by TradingView and add it to the chart. Now navigate to the RSI indicator settings and click on the Style tab. First, we will uncheck the RSI moving average and the background fill. After that, we will change the colors of the lines to make them more visible. That was all that we needed to do. Most people look at the RSI as a simple indicator to buy or sell. If the RSI is overbought, then they will sell, and if the RSI is oversold, then they will buy. Whilst this can in some cases work as an extra confirmation, one of the most powerful use cases of the indicator is ignored. The RSI indicator is perfect for spotting divergences. To better understand what a divergence is, let me show you an example. Whenever the price of the asset is moving in the opposite direction of the RSI, this can be classified as a divergence. Here we see that the price is moving in the upwards direction, making higher highs. But when we look at the RSI indicator, we see that it's making lower highs. This is a bearish divergence. Based on this, we will enter into a sell position. As you can see, if we had entered into a sell position, the trade would have been very profitable. Now that you fully understand how we will be using the indicators, let's take a look at the full strategy that combines these indicators. Let's first take a look at when to enter into a buy position. We will enter into a buy position whenever the price closes below the lower Bollinger Band. To confirm the entry, we will look at the RSI indicator. There will need to be a bullish divergence. This means that the price will need to make lower lows while the RSI is making higher lows. As you can see here, this is the case. Since both conditions have been met, we will enter into the position. We will place the stop loss at the recent swing low. For the take profit, we will target the middle line, which is the moving average, making sure that the risk-to-reward ratio is at least 1.5. Now let's see how the trade plays out. For a sell position, the following conditions will need to be met. Firstly, the price will need to close above the upper Bollinger Band, indicating that there is a large gap between the moving average and the price. After making sure that's the case, we will take a look at the RSI indicator for confirmation. There will need to be a bearish divergence. A bearish divergence is when the price makes higher highs while the RSI indicator makes lower highs. As you can see, this is the case. Since all of the conditions have been met, we will enter into the sell position. We will place the stop loss at the recent swing high. For the take profit, we will target the middle moving average line, making sure that the risk-to-reward ratio is at least 1.5. Now let's see how the trade plays out. As you can see, the trade was very profitable. By using the RSI indicator, all of these false entries that were provided by the Bollinger Bands indicator were avoided. This shows us how the RSI is used to filter out false signals. This was the reversal strategy that will allow you to start profiting and trading like a professional. I would recommend testing if the strategy fits your trading style by paper trading. I hope you enjoyed the video. If you did, please leave a like and subscribe to the channel.